Bail-ins. Let me explain quickly what that is. Banks have a hard time because they often make terrible mistakes. That is, they invest money by loaning it out to people and businesses who can't pay it back. When that happens, the bank is supposed to use the capital of the people who got together to create the bank, the capital of shareholders if they sell shares to the public, to deal with their mistakes, to fix the damage of folks they lent to who can't pay it back. It's the job of the bank not to lend to people who can't pay it back. So when they don't get repaid, like happened on a massive scale in 2008 and 9, you know what the banks do. They don't want to use up their own money, so they go to the government to get a bailout. The problem is the politicians who give banks big bailouts, as they did, get to be hated by the mass of people who understand very well what's going on. That private banks, to make private money, want the government to bail them out, and they don't want to have to do it. But the banks don't want to do it. So here's what the banks and the politicians got together. They found another sucker. You know who it is? The depositor. It turns out that the laws have been rewritten, starting with a bank in Cyprus that went belly up a few years ago, to allow banks, when they can't recover money they lent and should not have lent, they don't now have to go to the government to get a bailout. They can get a bail-in. You know what that is? Taking money from the depositors who put money in the bank and simply taking it to recoup their own capital that they can't get back from the people they lent to. Is it legal to have a bail-in, to take the money of the depositor and not give it back to them? The answer is yes. In many countries, including the United States, the laws now allow a bail-in. Should that upset you? Uh-huh.